intel on investing. Man, so many people in my community on my social media been hitting me up privately like, yo, what is the sauce? Where do I start? How do I start investing? People are talking about it, but I really don't know what it means to get into it, and I don't really know what I'm doing. People are talking too fast. They're using this crazy terminology. Look, you're in the right place, man, because I'm finna break it down to you, like a baby. That's my objective for this video tonight. And hopefully I can get you there. But I do want to go ahead and forewarn you, this may be, quite, a lengthy video. So I need you to go ahead and get your snacks or whatever and just sit down and just listen and soak it all in. And please, I advise you to take notes, because even though I'm gonna have it segmented to where it's easier for you to find what I'm talking about, but I also advise you to take notes, because writing things down also help you memorize, right? So let's get into it. The first thing, what is investing? What do you think about when you think about investing? Well, this is what investing is. It's essentially you buying into something, hoping for it to increase in value. You hope that it increases in value so you can get a profit on top of that initial money that you put up into that thing, whatever it is, right? And we're talking about, buying into assets here, right? So that's what investing is. Now, I do want to go ahead and let you guys know this, because a lot of people get this wrong. This is not a get rich quick scheme. So if that's what you're looking for, this may not be the video for you. You might need to go find your local scam artist and go ahead and get them, because this is a very legitimate process and a profession for most who actually do this thing, right? So now, the next thing I want people to get it, figure out is there's three major things that's going to revolve around like your mental clarity and your conditioning when it comes down to investing. You need to figure out, it amazes me how many people don't really even take this into consideration before they just jump into whatever. The three major things you need to figure out is your investment vehicle, meaning what are you going to put it into? Stocks, bonds, you're a mutual fund type of person, or you do real estate, you do cryptocurrency. What are you going to put your money into, right? That's the first thing. It could be anything. It could be even into your own business. You just need to figure out what you're more comfortable with, investing your money into in order to get a return, right? So now, 2, you got your time horizon. Your time horizon is how long are you looking to actually hold whatever it is, right? How long are you looking to be in the market? Are you okay with 3 to 5 years, right? Can you hold out that long before you even see a profit? Or are you more of a short-term, person, a year or less, right? Then you start getting into being more of a trader, which is a more immersive experience when it comes down to looking at the screens, watching the charts, knowing your technical analysis and stuff like that. If you're a long-term investor, which most people do through their like 401k and whatnot, they just basically, put their money into the 401k, or you could just look at it like that, right? You're just putting your money on a index fund and you just letting it fly, like the S&P 500. So you can put it into that, or you can buy into individual stock or whatever. But you need to figure out, what are you going to do? Like, how long are you looking to be in the market? Are you a long-term trader, or are you not even a long-term trader, but a long-term investor, or are you a short-term trader? That's what you need to figure out. There's no right or wrong answer. We're all designed differently. Now, you got risk tolerance. Like, listen, investing, if anybody makes it seem like investing is a one-size-fit-all type of thing, they're lying to you. It is not. It is going to be vastly, like, depending on who we are as individuals, what we can handle, what we can't handle, right? So I'll give you a couple of examples. Now, if you have high risk tolerance, that means that you can take a bigger blow, right? That means that you are more comfortable taking a specific type of loss. Meaning, like, let's just say if you had $10,000 on you, right? If you lost like 2,000 or 3,000, it wouldn't bother you. You're right, because you already know what you're getting into. You're just that aggressive, right? That's typically younger people. Now, if you have an older person, right? Because normally the older you get, they tend to have a lower risk tolerance, meaning they're not playing that. They're not playing around with that. They don't want to get into no type of trading. They don't want to do any of that. They don't want to stare at charts or nothing like that. They're not like, no. They just want to do long-term investing. They want to do it slowly but surely. So they're in the market for quite a while, and they don't want to they don't want to have any significant losses, which like I said, makes sense, right? So if you're younger and you got time to, mess up, come back, mess up, come back. The older people normally they probably already got what me and you have or more, right? They're pretty much well put together. They're just trying to preserve their wealth or protect whatever they have, protect their assets, have slow but steady growth. So that's the thing right there. We're all different. There's some people that down talk traders. There's some people that down talk long term. Listen, a little tip from me to you: do both. Do both. If you want to trade, right? In which I got ways on how I can help you kind of do that a little bit better. But if you want to trade and you're more of a short-term person, take a certain percentage of those gains, put it into long-term and hold, right? That is what I would do, right? And that's what I do. So I like to mix it up. I'm more aggressive, right? I have a higher risk tolerance than most, right? There's been days where I had a 1K day, I had a 3K day, right? Most people can't stomach that. So it's basically about how much money can you put in and lose without you losing your mind and having to go to the hospital. So you need to kind of dip your toe in and figure that out before you even just blindly invest your money. Luckily for you guys, I have a way that you can start investing today for free. So I'm talking about, for free. So just stick around and we're going to get to that. All right. So what are stocks? I mean, stocks are basically when a company that was privately owned, IPOs, which is they give an initial public offering, which also means, hey guys, we're open to the public now. We want to offer you guys share in our company. So that means you guys can have some equity in our company because we need to raise capital to keep growing in the future. So if you guys want to come along and ride with us and win with us, we'll give you the opportunity to do so for said price, which is AKA the share price. So here's a notorious one. Apple, which is one of the biggest companies out right now. Did you know that in 2001, their stock price, their share price, was a measly 50 cents? I'm just rounding it off right now. It was about 50 cents per share. If you would have had $1,000 back then and put $1,000 on Apple and bought, that would have gave you about 2,000 shares. Did you know that just December of last year that Apple had just hit an all-time high of $199.37 per share? So let's do the math on that. You got 2,000 shares that you had bought with $1,000. So you got 2,000 shares times $199. So your grand total, what you would have had right now in your portfolio, is $398,000. This is just like raw, price. You would have had more than that. But I'm just letting you know the power of the stock market and how crazy it can actually be. This is why we don't want to keep missing waves. You don't want to miss wave after wave after wave, right? And when these stocks go low in share price, we want to buy them. We want to buy them so we can get a better deal on them. Look at it like something is going on sale. When the stock market is red, you buy. All right? So that's just a good, general tip for everybody that anybody can do. Okay, so being that you guys are complete beginners and babies with this thing, I highly suggest you guys go with stocks and ETFs, and that's what I'm going to talk about in the remainder of this video, because they have the most liquidity and a low barrier to entry. Just simply meaning they're easy to get into and easy to get out of. You don't have to worry about a long-term commitment with this. You wouldn't want to do anything long-term if you're completely new and don't know what you're doing, right? You don't want to get into anything that you're trapped in. So as quick as you can buy a stock or an ETF, you can sell it, right? So it's very, very liquid. And liquidity just basically means how fast you can turn whatever asset you bought into cash. So you need to look at indexes and ETFs like a basket of stocks instead of one singular stock. So I'll give you an example of one of the most familiar ones, which is the S&P 500. And the S&P 500 consists of the top 500 performing companies in the US. If you don't want to deal with, you just want to invest long term, you don't want to deal with trying to figure out a top or a bottom or anything like that, then you need to get into what you call dollar cost averaging. Okay, so here's a more traditional and safer way to invest. Most people use this as their investment vehicle to go ahead and aim for retirement, right? Because life is not about working to the bone and, forgetting that you have to enjoy life as well. Nobody wants to work till their deathbed. So this is why I am a advocate for long-term investing. Even if you are a short-term person and want that active income, you need to be doing both. So let me explain to you the wonders of compound interest. It's such a crazy thing. It's magical, right? And then I'm going to throw in dollar cost averaging. I'm going to explain what both of those are, okay, and how they work. I'm more so going to show you how compound interest work, and I'm going to explain dollar cost averaging. Okay, so now the nature of the market has to go up and has to go down, and it has to repeat that cycle over and over and over again, right? To give you more psychology on why it's doing that. Most people hate when their stocks go down. Oh, it's red, blah, 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 blah. But really what that is giving other people a chance to share the wealth or even become wealthy. That is a buying opportunity, believe it or not. These things have to go back down to discounted prices, right? And then when the stock's at all-time highs, those are selling opportunities, right? So you got to have a buyer and you got to have a seller, right? So anyway, now some people try to call it complete bottoms, call it complete tops and whatnot. This is the safer way to invest because you're not relying on that. What you're going to be relying on is the dollar cost averaging in the time that you have that's going to be on your side, that is going to be helping you compound your money, right? So basically, dollar cost averaging, how you do this is you will have a set amount that you want to contribute monthly, weekly, or whatever, right? Whatever your plan is. I would just say monthly in this scenario because that makes it easier for everybody. So let's just say you had an initial investment of $1,000, right? And the reason why I'm dropping this bar very low is because I want everybody to see how accessible this is to anyone, right? Okay, everybody. A lot of people get tax checks. Even if you don't, a lot of people can run across $1,000 at least. So let's just say you got $1,000 and you put that into the S&P 500. The S&P 500 is known historically. This is the stats. This is not something that I'm going based off feeling. It's known to usually return about around between 8 to 10% every year. Right? So keep that in mind. Every year you can look for your money to go up about 10%. So I'm going to go to the investment calculator. We got $1,000 and let's just say you're 30 years old right now. I'm just use that as an example. You could be 25, you could be 20. It don't matter. But I'm going to just show you what can happen in about 30 years. So I'll go as low as $100 a month. That's what we're going to contribute. That's going to be our dollar cost averaging strategy, right? Meaning we'll buy at the top. We don't care. We'll buy at the middle. We don't care. We'll buy at the bottom. We're not even looking at the stock price. We understand what compound interest is going to do later on in life, right? And on $100, let's be serious. I mean, you can pretty much run across that, and you can lose that by accident. You're gonna spend it anyway. Let's be serious. You're gonna spend it on clothes. You're gonna go buy some bottles. You're gonna go buy these shoes you want. You're gonna buy some video games you want. You're gonna just eat out and spend $100. So anyway, now let's just see how much money we would have. $1,000 initial investment over the course of 30 years with a 10% return rate annually. And we got $100 monthly. What will we have? Okay. We would end up having, drum roll, $223,733.73 if all we did was put $1,000 in today on the S&P 500 and sit here and just let our bank account just automatically feed the brokerage $100 and put $100 on in the index fund for over the course of 30 years. We would end up with that much money. Okay, so that sounds good, but how much money would I have put into it out of my own pocket? Here's the beast with compound interest. So your total contributions over the 30 years would have only been $36,000 out of your pocket, right? You ain't even ready for what the compound interest will show you. So if, let's just say it went as planned, you would have an estimated whopping $186,733.73 in just interest that you accrued the whole time, right? Interest will add on $186,000 and some change onto your measly $36 that you kicked out. $36,000 that you kicked out. Come on, that's crazy. So let's just say, $100, I could do more than that because most people still can, right? Most people still can. Let's just say you're like, nah, man, I want to do 250. You know, if that's the case, it's gonna make me money like that. Okay, let's do 250. Boom, 250 would make you end up with $533,160 Come on now. And that's when you retire. You'll be, if you start at the age 30, you'll be 60, right? You'll be 60. If you take care of yourself, you're gonna still enjoy life at 60. You get what I'm saying? And this is why you're making all the short-term moves. We ain't even talking about the short-term move. We're talking about just the guarantee. Like if it all fails, I know I'll have this later on. I'll have something close or in the ballpark. That is how you play the game to win. There's so many people that don't know how to delay gratification, right? You got to know how to delay gratification and stay disciplined and do what you're supposed to do as an adult. Everybody want to play today and then they want to be miserable tomorrow. Listen, all you're going to do is prolong today's pain so you'll have to do it tomorrow. And you're going to keep repeating that cycle. Now, that's the long way of investing. And that is why I say it's very important to have time in the market. Time will be on your side. If you're going to do short term, get those short term gains and get in the long term. All right? Get in the long term. It's one of those things you don't want to just not do. Important things is, let's just say you're going to be a day trader or something like that. You're definitely going to need to follow price action and understand price action and actually know your technical analysis, right? Your price action and technical analysis is going to help you predict price movement. Now, you're not going to always get it right, which is why you practice things like risk management, right? Which is going back to your risk tolerance and stuff like that. You need to do it according to how much you're willing to risk, which is why it's important to be able to predict movements and know, okay, hey, if I'm right, where do I need to take profits at? If I'm wrong, where do I need to sell at? You know, you need to go ahead and have a stop loss set for every purchase if you're going to be doing a day trade or anything like that of the sort. Or it can be, a little bit longer than a day trade. Doesn't matter. You need to know what these things are before you get into investing into the stock market, right? So you got price action, and basically you have what you call candlesticks. So candlesticks are nothing but the visual representation of what the price is doing in real time, right? So you got the green candlesticks, that means that people are buying. You got the red candlesticks, that means that people are selling, right? So green candlesticks open at the bottom and they close at the top. Red candlesticks do the opposite. They open at the top and close at the bottom, right? And then you have what you call wicks, right? Or like the shadows or whatever. People use different words. You got the wicks. The wicks are the skinny little lines, basically where price went to but could not stay, right? Maybe there was too much selling pressure, so it's a wick at the top. Maybe there was too much buying pressure, so there's a wick at the bottom, right? So though that's a little bit of terminology that you need to know. And then you need to understand, the bear talk, the bull talk. All right, so if you hear people saying, "Oh, bears are going crazy," that means the stocks are dropping. It's a red day, it's bloody. If you hear people talking about bulls, right, they're saying, "Oh, we're looking bullish," then that means the stocks are green. It's a strong push. And for you guys aren't trading options or anything like that. Because you're just getting your feet wet, you're just learning about all of this. You are betting on the stocks going up. Okay, so you want to hear bulls, 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 even though it's inevitable because the nature of the stocks, they basically go in patterns, wave patterns. So they go up and down, up and down, up and down, right? So those are some of the most important things right there that you need to figure out. Then you need to figure out what indicators are. Indicators are basically tools that help you predict the price movement. They give you like the medians, they give you the averages of where the price is predicted to be at over a certain period of time, right? You got the EMA, which is exponential moving averages. You got the MA, which is moving averages. You got the Bollinger Bands. You got the RSI, which is basically the relative strength index. And then you got the MACD. You got volume. You got so many different tools to help you out. But this isn't about going, real deep in depth. You need to basically find a strategy that works for you, something that's tailor-made for you. And you won't know until you get your screen time in and do some trades, win some trades, lose some trades. You can do all of that with your paper trading, though. You don't have to really put your real capital in. You need to find a strategy that you trust. Then you also have pattern traders, right? They trade bull flags, bear flags, you got falling wedges, ascending wedges. You got all kinds of things that can help you out. Double top, double bottom, cup and handle. It's a lot of different, trading tactics out there. You just need to find out which one is working for you, and you need to back test your trades. Back testing is pretty much when you just review your wins and your losses with that particular trade, with that particular strategy, right? Whatever style you're using, you have to back test it. See how many times it worked. Back test at least 100. See how many times it worked, how many times it didn't work, right? And then you'll go ahead and get you like a percentage out of that. And then that will determine like, okay, this is one of my A+ setups. So I'm going in when I see this. This is that's kind of iffy. This strategy ain't really. So if I do risk any capital on this, I want to make sure it's at a minimum. And being that we got to risk, I want to talk about risk management now. So risk management is very important. We already know that is pretty much depending on your risk tolerance first. And once you have that, now you got to get to the numbers, right? you need to figure out what is going to be your risk ratio. So if you want to do a 1-to-3, which just basically means, hey, for every trade, if I'm going for a 1-to-3, that means I'm going to risk $100 to make $300. So, it might be that, and it might be like a 1-to-6, right? Who knows, depending on what it is. It could be a 1-to-1. It's all entirely up to you what you want to do. Now, I will tell you this. You do not want your risk to be like, your risk management to be out of whack. I've been there before. Did some crazy trades where basically, instead of doing like a 1-to-1 or a 1-to-2 and whatever, I'm literally not even paying attention. And this is in my earlier, time frame. I'm risking like 2 for 1, right? Which means I'll lose $200 easily just to make 100, right? That's out of whack. Your capital won't survive like that, right? Okay, so by now you're probably like, okay, I get it. I catch your drift. I think I know where you're going with this. I think I understand a little bit more. How do I get into it? I'm ready to purchase something. I'm ready to own an asset, right? Okay, so the first thing you need to understand is you need a brokerage account, right? What is a brokerage account? It's just an investment account that allows you to buy and sell stocks or equities, right? And then what you need to do is make sure it's a trusted brokerage account. Don't worry, I got you covered on that, because I'm going to give you the one that I use every single day, right? I can't really speak for too many others, but I can speak for Webull Financial, right? I do all of my trades with Webull. And the reason why I went with that, I used to originally use Robinhood, but I had more flexibility, better chart view, real-time data coming in. Webull is where it's at, especially for beginners. It's very easy to use all the way up to advanced level, right? They have plenty of tools that you can use at the advanced level as well. So that's very important. And even more important, right, to sprinkle on top of that, they have what you call paper trading, which is basically when you are simulating trades with real-time data. Like, that is very, that's vital to a beginner trader that's trying to get their feet wet and don't really want to risk their real capital. So you can put fake capital up and see exactly what the motions of the market is. And that's a very good way, because you want to treat it as your real money. That's a tip, right? Treat it as your real money and see exactly what you can handle and what you can't handle. And at the end of it, guess what you still got? Your real money, right? So that's very important to see what you will be getting yourself into with the lot sizes and all of that stuff, right? Like how much are you going to actually risk? So that's a good way to figure out your risk tolerance. And then even better, these guys are literally giving out money, right? Right now, I mean, they've been giving out bonuses forever. Like I love Webull. Like, they're so generous. Right now, I know that if you just deposit like 1 cent, literally only 1 cent, they'll give you at least $30 to $1,000 worth of stock. We do not know exactly how much they will give you because it just varies, but just think about it. That investment alone is crazy. 1 cent, and you're going to get about 30 to 60 to 100 or $1,000 to 2,000. We don't even know, right? It's crazy. So I highly suggest that you go ahead and get into that, because that's a no-brainer, right? That's why I suggest Webull with full transparency. For one, they're generous with the amount of money they give out, and they're really there for the beginner traders, and they give you a good way to get your feet wet as far as not putting up your own capital so fast, right? So now that we got the Webull out of the way, I'm going to actually go through a quick walkthrough tutorial on how to actually use, the interface, right? Actually how to, see what you're doing inside of that, being that I suggested Webull. And then I'm also going to leave the links to Webull Financial, and I'm going to leave the links to the other trading platforms that I'm familiar with, because everybody might not like the same trading platform. I get it. Everybody's different. Now, your brokerage account is basically going to ask you a lot of questions about like your risk tolerance, your time horizon, and your investment experience and stuff like that, because they need to know like what you're doing, where your income is coming from, and stuff like that. So you need to go ahead and answer those questions. You'll be able to get approved. They'll open your account, and you got the option to open a margin account or a cash account. I highly suggest opening a cash account, because a margin is basically, if you look at it like credit, right? You can end up going in the hole and be at a deficit, right? You don't want to do that, being that you don't really know what's going on, right? And they only give you a certain amount of trades. They only give you 3 for a whole week. So you're going to have to choose wisely, right? Now, cash account, you can trade as much as you want until you exhaust your own funds, right? So I'll give you an example. If you have $1,000, you can literally trade 10 $100 trades, right? After that 10th one, you got to wait, and then it'll renew the next day. Okay, so this is universal knowledge. There's going to be a few, very important things that you're going to look for in all platforms. It's going to be the watch list, which is where all your tickers are. And your tickers are just simply symbols that help identify the stocks or equities, right? And then you're going to have your charts. Your charts is where you can follow the price action, meaning you can see real-time data on where people are buying, where people are selling, and stuff like that, right? You're going to have, of course, the place where you actually upload your money and withdraw your money, right? You're going to have these 3 things that's going to be essential to you actually putting your money in there, right, in the brokerage account. And then your watch list is how you find your actual stocks that you want to pay attention to or purchase. You put them in your watch list. You go search for whatever it is, search the ticker. And so say if you want to type in Apple, you go ahead and type in Apple. And then you will put it on your watch list. You click Apple, and then you can actually click where it says buy shares. And this is pretty much like across all platforms, right? So I'm trying to keep it pretty general while giving a Webull tutorial at the same time. All right, so we are now in the mobile version of Webull, and I'm already assuming that you guys went ahead and clicked my special link that I provided for you in order to unlock your free stock promo. Okay, so I'm assuming you guys already went through the sign up with the email. You click the link, sign up with the email, put your phone number in. You downloaded the app, and when you downloaded the app, you click this bottom button right here that I just clicked, and that should say open brokerage account. Okay, you open the brokerage account, and then you guys answer all of the questions and follow the steps. You identify yourself, and you answer the investment questions and stuff like that. And don't worry, it's not a pop quiz, it's not a secret test where they're just trying to block you out. They're just trying to ask general questions. If you need help, I have an email that I'll put on the screen maybe, and I'll put in the description below, and I'll help you guys out. I usually answer within the same 24 hours, right? 24 hours or less, I'll try to answer and help you guys out. But so let's get to it. Here's the major things that you'll need to navigate between any brokerage account, right? Any, whether it's Webull, Thinkorswim, E-Trade, doesn't matter, right? You're going to have to know, where in the world do I upload my money? Okay, so you got everything set up. Let's go ahead and see where we'll upload and withdraw the money, okay? Deposits, make these deposits. So we'll go click right here, the middle Webull sign, okay, in the middle the bottom in the middle of the screen. And what we'll do is we'll click
This says your accounts overview, right? This will show you, you know, it got your Roth, you got your cash management, it got the, you know, and the brokerage itself, the brokerage money itself. Okay, so let's go ahead and click individual. We'll click individual. As you look at the top, this will show you, you know, everything right here, as you can see on the screen. So you look at the top where it says assets, P&L, orders, transfers, history, and so on. So what you're going to be clicking is the transfers. When you click transfers, you guys will see deposit and withdraw. So it's the same thing when you're trying to deposit your money. It's going to go ahead and click set you up through ACH method. That's the easiest method versus wire. I mean, ACH is just very convenient. And so you set up your ACH, and then it'll link you through Plaid. Okay, so that's pretty much self-explanatory. It'll walk you through everything, and then you'll go ahead and upload your first 1 cent in order to unlock your promo and have those free stocks on its way to you. All right, and then also it's the same thing when you're trying to withdraw money. Okay, same thing when you're trying to withdraw money. All right, so let's go back out of here. So what's the next important thing? The next important thing is, okay, let's just say you have in mind what type of stock or ETF you're looking for, right? You need to figure out, how do I find it? You may have some generic um, stocks here posted already as soon as you get in here, but I just went ahead and wiped it clean because I wanted to walk you guys through how to do everything. So now what you're going to do is you're going to click this magnifying glass at the top, in the top corner right here. Magnifying glass. This is how you search for whatever you want to search for. So let's just say we're searching for Apple. So let's find Apple, and of course you can type it in regularly as well. Type in Apple and you'll see. So once you see Apple at the top, you're going to go ahead and click on the plus sign to the right of it. Right? Just go ahead and click cancel and get out of here, so it can bring us back to the watch list. Here's the watch list, and now you can see Apple and its ticker just populate in the watch list. Okay, so now, okay, I know how to find my stocks now. I mean, I know how to upload my money, I know how to withdraw my money, I know how to find my stocks. So now let's go ahead and click on Apple itself. Here's the share price populated to the top. Okay, it says $168.45. That's what it just closed at, you know, for the trading session. So as far as right now, it is $168.45, and as you see it at the hours right up under it where it says $168.36. That's what it costs. That's what it costs in order to get into a position with Apple and get one share right now. So now you see at the bottom where it says trade and then it says options in green. Okay, I want you to look all the way over to the right, and we're going to actually click the three dots. So now we want to go ahead and get to paper trade, which is what I spoke on, which is basically you trading with simulating trades with fake money. So these are hypothetical trades. So let's just say that we want to get in a position. Now, there's a couple of things that you want to pay attention to as far as understanding how to get into a position and how to exit. Okay, so first, before we buy one, I want to go ahead and show you how to go ahead and set up your paper trade, right? So you see where it says net paper account value. Let's go ahead and reset here and set up your own amount. Let's go ahead and put $1,000 in. Confirm reset. Here's $1,000. Okay, so now you have no positions that you're in, you have no open orders that you have going on. So let's go ahead and click stocks right here, right up under the amount. Go click back on Apple, and then when we click back on Apple, what we're going to do is we're going to click the paper trade button, the orangish yellowish button right here that says paper trade. Okay, now you got the buy in green, and then you have the sell in red. Okay, now you have two types of orders you guys can use. You have a limit order, and then you have a market order. Okay, so let me just explain the limit real quick. So if you're trying to buy limit, basically you are just saying, hey, I want to buy at this particular price, but no higher. Okay? I want to buy at this particular price, but no higher. If you're trying to sell, you're basically going to say, hey, I'm selling at this amount, but no lower. I don't want to go any lower. So let's just say the hypothetical price was going to be $168.41. Okay? You set that limit price. This is what you want to buy it at. Okay? All right? So now you're going to go to the box under it, which is your quantity. Okay? And as you can see, as we bump the quantity up, it will go ahead and auto calculate how much that is going to cost us. See the estimated amount way at the bottom here? Look at it change. See? All right, let's just say we wanted to buy 3 shares of Apple. Now, the time and force, the trading hours, you're going to leave that the same. And the time and force is normally for the day, okay? So it can be for the day that you want that. That means that's just how long that order will stay in the air until that price hits. All right. So you will click paper trade and you would buy. So what's gonna happen is, being that this is real time data, or market, this is not going to fill because it's already 4:37 right now is when I'm making this. So it's not going to fill, okay? But you will see where it says filled quantity. The total quantity is how much you're asking to buy. The filled quantity is how much you actually bought. So sometimes if you have your buying price and you got it, it's bidded real low. So you set your limit to, significantly lower, right? You want to buy it when it gets to 167 instead of, that. So if you wanted to bid it down here and put your limit down there, you got to understand that it may not fill when you want it to fill, okay? It may not fill because you're trying to look at it like this. You're trying to be a cheapskate. So it may not fill, but it could fill. And if it does, hey, you're in a great position. You got it for the price you want it. So that's what limits are for, right? That's what bids are for. Now, let's just act as if we already bought that, it filled, and now you want to get out. So we're gonna go here, and we're gonna try to sell it at the highest possible price. So let's just say we're at let's go ahead and try to sell it at ask or so. And just because you're clicking ask don't mean that that's going to fill automatically, okay? The price has to go back up there in order for it to actually trigger that sell for you. So always remember that. Just because you push the button don't mean the order is filled. All right. So now we go to 1, 2, 3, and it's gonna tell you the estimated amount that you will make. So you'll make $505, and you'll get $505.17 from selling these 3 shares. Okay. So you will click you're going to click the paper trade button, which would be the sell button. And of course, like I said, is not going to work right now because we didn't even buy anything to begin with, so it's nothing to sell. Okay, so that's why you just got that message. But that is essentially how you do that. It's very easy. It's not hard at all. Okay, so this is how you control your paper trading and stuff like that. So let's go ahead and get rid of that order right here. Let's go ahead and get rid of that order. Let's cancel because it's not going to go through right now because the market is closed. All right. So then you got your feeds here. This is not that important. You got your feeds, and then you also got your promo section. You got your promo section to let you know what's going on. So also I'll show you where you'll get your free stock. So let's just say you deposited your 1 cent today, right? You'll get your free stocks when it comes in. It will show you right here where it says shortcuts. It says my rewards. You see what I'm saying? Get my rewards. It'll show you, and it'll highlight, and it'll show actually a little I think in the middle of the screen, I believe, it will show you right here where you click. So that is pretty much what you're looking at when you get in Webull. And let's explain maybe the chart. So let's click on Apple again. Let's explain the chart. So now you have what you call right here the chart. All right. So this is the candlesticks, the red and the green things right here. Okay. These are the candlesticks. This is what the price is doing every minute of the day, because right now that's what we have the time interval. If you look down, you got the little drop down on the blue highlighted 1 minute right here. You can look, you can do 1 second, you can do 2 minutes, 3 minutes, 5 minutes, 10 minutes, however much information you want to see at a given time. You can actually go ahead and do that. So we can click the hour. So this is what it's been doing hourly. Okay. It's what it's been doing hourly. Let's go to daily. This is what it's been doing on a day-to-day basis. So now we got bigger candlesticks now. Then you go to weekly, monthly, and you can go to yearly. See, as I stated, look at how this market moves. This is why you should invest long term as well. Look at it. When we first started, I mean, this is all the way back to when the 1990s, right? Cheap, very cheap. Then look at this burst. Crazy where we are right now. So that's just basically how you use that. I mean, and then you got your indicators. So let's look over some indicators really quickly. You have indicators. Let's click this little square right here where it has 4 little circles, and you click indicators, right? And right there you got your moving average, you got your EMA that I have selected already, you got your Bollinger Bands, you got your cloud, your VWAP, and then your sub charts is like your volumes and things like that. And you got your RSI, your MACD. So that's pretty much like how you're using this. It's not hard. We have constant news going on, constant news going on. You can click news right here to tell you all the news about the NASDAQ, Apple. It'll show you all the news on whatever particular stock that that you have in your watch list. So yeah, that's pretty much Webull. It's pretty easy to use. Make sure you guys utilize the paper trading. That's very important so you can get your feet wet and know what you're doing. Make sure you guys actually get those free stocks, take advantage. And yeah, man, we're lit.
Now, like I said, and I want to tell you this. I'm glad you guys want to get, into this game. I'm glad some of you guys want to make this a profession. But like I'm telling you, you need to get with somebody that can actually show you the ropes. Somebody you can actually talk to on a day-to-day here and there. Check in with them that could give you some good insight. There's plenty of people out here. They got plenty of trading communities. I had one that I built myself. It's I can drop the link for you, whatever. It's completely up to you, but I'm not selling anything or whatever like that. I'm just pretty much pushing the knowledge right now. I don't have anything as of right now to sell you, because I truly believe that trading is a type of sport that nobody can just sell you the sauce on it. I can sell a course to show you how to work everything, and give some tips in it, but I cannot give you that golden or magic button to make sure you win every single trade. It just doesn't exist here, right? You got to get your screen time in. You got to get your reps in, just like going to a gym. We can't give you some fake abs. We can't give you some fake muscles. We can't do any of that, right? It's not a microwave thing, but it's one of the things that when you master it, oh boy, it'll be some of the fastest money you ever seen in your life, and you will not think the same about money. You will not think the same about money. And trading actually mentally conditions you to be a better person. Every trader I know has became a better person, or they got a lot of life lessons during their journeys, right? So trading is basically, you have no one to blame but yourself, and you are only facing you. So, like I said, if you want to get into this journey, man, hey, more power to you. I love it. I love to see the community jump on board and get into things and, spread their wings and elevate. Let's do it. I mean, this is some of the fastest money that you could ever make, bro. If you know what you're doing, right? It's possible, but you got to put in the work, and you're going to take some of your L's, and you need to be in, like I said, you just need to be around people that know what's going on. And that's pretty much what I'm gonna leave you with, because like I said, this video wasn't to go into deep depths on all the technical and mechanics of everything. I'll leave that for later videos. This is for people who are like not hip or aware of what to even do or where to even start. And don't let anybody talk you out of this. Like, don't let anybody talk you. If you want to invest in real estate, you want to invest in the stock market, you want to do options trading or whatever, then do you. Because at the end of the day, only thing you're going to regret is not going hard and doing everything you could have done while you were in your youth, right? While you had, you got the knowledge at your fingertips. Information is more accessible than ever before. Go hard, bro. Go hard. If this is what you really want to do, go hard, man. Like, I really encourage you to do it. I took a leap of faith, and I had my ups and downs in this market, but I wouldn't trade it for nothing in the world, bro. Like, ain't no way that, ain't no way. I'm gonna just keep it like that. You know what I'm saying? Like, I would never stop doing what I'm doing right now. And yes, I have other streams of income. That's the whole point, right? That's why I advise you to have other streams of income, so you can, kind of have like that safety net. But hey, once you got that, and once you get a hold of this thing, oh boy, you off to the races, and you're gonna be up. You're gonna be up, especially if you stick with it. Most people can't stick with it because they let other people get in their head. They let life get in their head. They looking for instant gratification. It's a plethora of reasons why people never stick through certain things. But it's not just this, industry. It's everything that they try. They just can't follow through. So if you the type that got that, that persistence and consistency, and you got that discipline, this is perfect for you.